Based on the provided data, a potential strategy could involve a long position in Bitcoin. The historical data shows a general upward trend, with prices fluctuating within a range. The forecast data also suggests a potential for further price increase. The support price at $95,600 provides a strong base for a long position. A potential entry price could be around $95,800, with a stop-loss order placed at $95,400 to limit potential losses. The target price could be set at $98,300, which represents a potential upside of approximately 2.5%. The RSI indicator is currently in a neutral range, suggesting that the market is not overbought or oversold. However, a move above $60 could signal a potential for further price appreciation. The Bollinger Bands indicate that the price is currently trading within the middle band, suggesting that the market is in a consolidation phase. A breakout above the upper band could signal a strong upward move. Combining these indicators, a long position with a cautious approach seems appropriate. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, with a forecast indicating further decline in the coming week. Support levels hold at $295, while resistance sits at $320. The RSI, hovering around $30, suggests the asset is oversold, potentially indicating a temporary bottom. The Bollinger Bands show price action contracting, suggesting a potential for a breakout in either direction. Given this analysis, a potential strategy could involve a long position. Entry would be initiated at $310, with a stop-loss order placed at $295 to mitigate risk. The target price would be set at $320, aiming to capitalize on a potential bounce off the resistance level. This strategy leverages the oversold RSI and the potential for a breakout, while managing risk through a tight stop-loss. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a general decline, with the price falling below the support level of $0.874 in the last week. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below the recent support level. The RSI indicator is hovering around the 30s, indicating that the asset is oversold. However, the Bollinger Bands are also contracting, suggesting a potential for a sideways movement or a short-term bounce before further decline. Given this analysis, a cautious short position could be considered. Enter a short position at the market price when the price breaks below the current support level of $0.874. Set a stop-loss order at $0.889 to limit potential losses. A target price of $0.835 can be set based on the forecast data, aiming for a potential profit of approximately 5%. This strategy combines the oversold condition indicated by the RSI with the bearish trend suggested by the price action and the forecast data. Based on the provided data, Ethereum appears to be in an upward trend. The historical prices show a consistent increase, with the forecast data suggesting continued growth. The support price of $2,590 provides a strong foundation for this bullish outlook. A suitable entry point for a long position would be around $2,600, with a stop-loss order placed at $2,590 to minimize potential losses. The target price could be set at $2,740, aligning with the historical resistance level. An alternative strategy could be implemented using the RSI indicator. If the RSI falls below $20, indicating an oversold condition, it could present a buying opportunity. Conversely, if the RSI rises above $80, signaling an overbought condition, it might be prudent to consider taking profits or reducing exposure. Based on the provided data, XRP appears to be in an overall upward trend. The price has consistently moved higher over the past 2 weeks, supported by the rising RSI and the price consistently trading above the $2.42 support level. The forecast data also suggests continued upward momentum. A long position could be initiated with an entry price around $2.58. A stop-loss order should be placed at $2.42 to protect against a reversal in the trend. The initial target price could be set at $2.74, the recent resistance level. For a more risk-averse approach, consider waiting for a pullback towards the $2.42 support level before entering a long position. The RSI, currently around $46, suggests the possibility of a slight correction before the upward trend resumes. The Bollinger Bands indicate that the price is currently trading within the middle band, suggesting a potential for consolidation before further price movement. This strategy would involve entering a long position at $2.42, with a stop loss at $2.39 and a target price of $2.74. Based on the provided data, Binance Coin appears to be in a slight uptrend. The historical price data shows a general upward movement with support around $619. The forecast data also suggests a continuation of this upward trend. The RSI indicates that the asset is not currently overbought or oversold, suggesting potential for further upside. Considering these factors, a long position could be considered. A suitable entry price would be around $650, with a stop loss placed at $619 to protect against a potential reversal. The target price could be set at $674, representing the recent resistance level. This strategy aims to capitalize on the potential continuation of the uptrend while managing risk through a defined stop loss. Based on the provided data, Stellar appears to be in a sideways trend, with prices fluctuating between the support level of $0.315 and a resistance level of 43 cents. The RSI indicates that the asset is not currently overbought or oversold, hovering around the neutral level of $40. The Bollinger Band suggests that volatility is relatively low. Considering these factors, a potential strategy would be to enter a long position when the price breaks above the resistance level of 43 cents. The stop-loss order should be placed at $0.315 to protect against a significant downside move. The target price could be set at 47 cents, which represents a reasonable upside potential based on historical price action. This strategy combines the momentum of a breakout with a defined risk-reward profile. The analysis of historical and forecast data suggests a bearish trend for Toncoin. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $3.54 is likely to hold initially, but a break below this level could signal a more significant decline. Given this bearish outlook, a short position could be considered. A suitable entry price for a short position would be around $3.60, with a stop-loss order placed at $3.65 to limit potential losses. The target price could be set at $3.30, which represents a potential profit of approximately 9%. This strategy utilizes the bearish trend and the potential support break to capitalize on the anticipated price decline. The RSI indicator is currently below $30, suggesting oversold conditions, which could provide a buying opportunity for a short position. Additionally, the price action is approaching the lower Bollinger Band, indicating a potential price reversal. Based on the provided data, Cardano appears to be in a bullish trend. The price has been generally rising over the past 2 weeks, with support holding strong at $0.683. The forecast data suggests this upward trend may continue, with prices expected to hover around 74 cents to 75 cents in the coming week. A long position could be initiated with an entry price around 75 cents, targeting a profit of 80 cents with a stop-loss placed at 73 cents to manage risk. The RSI indicates that Cardano is not currently overbought or oversold, suggesting there is room for further price appreciation. The Bollinger Bands show prices trading within the upper band, indicating potential for continued upward momentum. However, a close below the lower band could signal a shift in trend and warrant a re-evaluation of the position. Based on the provided data, Litecoin appears to be in an upward trend. The historical price data shows a consistent increase, with the price closing above the previous day's close on most days. The forecast data also suggests continued growth, with prices projected to remain above the current levels. Considering the support and resistance levels, the current price is comfortably above the support price of $101 and below the resistance price of $135, indicating potential for further upward movement. A buy position could be initiated at the market price when the RSI crosses above $60, indicating an overbought condition. The stop-loss price should be set at $101, the identified support level, to limit potential losses. The target price could be set at $135, the resistance level, aiming for a potential $30% return. This strategy utilizes the upward trend, the RSI indicator, and the support and resistance levels to identify a potential profitable entry point. Based on the provided data, Doge-Coin appears to be in an upward trend. The historical price data shows a consistent rise with minor corrections, and the forecast data suggests this trend will continue. The support price of $3.20 provides a strong base, while the resistance price of $3.46 presents an immediate hurdle. Considering the RSI, a buy signal can be triggered when the RSI dips below $30, indicating an oversold condition. We can set a stop-loss order at the support price of $3.20 to limit potential losses. The target price can be set at the resistance level of $3.46, aiming for a potential 10% gain. Alternatively, a more aggressive strategy could involve waiting for a bounce from the support price of $3.20 and entering a long position with a stop-loss slightly below the entry point. Based on the provided data, Aptos shows a potential upward trend. The historical price data reveals a gradual increase, with the price consistently bouncing back from the support level of $5.65. The forecast data further suggests this upward momentum, with prices predicted to stay above the support level. Therefore, a bullish strategy is recommended. A long position should be initiated when the price breaks above the resistance level of $6.30. The entry price for this trade would be $6.30. A stop-loss order should be placed at $5.65 to limit potential losses. The target price for this trade is $8.38, representing a significant upside potential. This strategy leverages the bullish trend and aims to capitalize on the potential price surge. Based on the provided historical and forecast data, SE appears to be in an upward trend. The price has been consistently moving higher, with a notable surge in the last week of the historical data. The forecast data suggests this upward momentum will continue. A good entry point for a long position would be around $0.235, with a stop-loss set at $0.227, the historical support level, to limit potential losses. The target price could be set at $0.265, representing a potential upside of approximately 12.7%. The RSI indicator supports this bullish outlook. It has been hovering around the oversold level of $20, indicating potential for a rebound. Furthermore, the price action has been consistently breaking above the resistance levels, suggesting strong buying pressure. The Bollinger Bands are also widening, indicating increasing volatility and potential for further price movement. This combination of factors suggests a strong potential for SE to continue its upward trend. Based on the provided data, Ethereum Classic appears to be in a sideways trend with a slight upward bias. The price has been fluctuating within a range, supported by the $19.70 level and facing resistance around $20.70. The RSI indicator suggests the asset is not oversold or overbought, hovering around the neutral level of $50. The Bollinger Bands are relatively tight, indicating low volatility. Considering these factors, a potential strategy could involve a long position initiated around the $20.20 entry price. The stop-loss order should be placed at $19.70 to protect against a potential downside break below the support level. The target price could be set at $21.20, aiming for a 5% profit based on the recent price action. This strategy utilizes the support level as a risk management tool and targets a realistic upside potential. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI indicator is currently in oversold territory, suggesting potential for a short-term bounce. However, the overall trend and the forecast suggest selling pressure may continue. Therefore, a short position could be considered. A suitable entry price would be around $0.305, with a stop-loss set at $0.315 to limit potential losses. The target price could be around $0.275, aligning with the forecast lows. The Bollinger Bands indicate a narrowing price range, suggesting a potential breakout in either direction. However, the current price is below the middle band, further supporting the bearish outlook. The RSI strategy, with an oversold level of $20 and an overbought level of $80, confirms the potential for a short position. The combination of these factors suggests a strong bearish bias for Polygon in the coming week. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further drops. The RSI, while fluctuating, remains below $30, indicating oversold conditions. However, the Bollinger Bands suggest potential for a bounce as the price approaches the lower band. Therefore, a cautious long position could be considered. A potential entry price would be around $0.145, the midpoint of the predicted decline. The stop-loss should be placed below the recent lows, at $0.140, to minimize risk. The target price could be set at $0.165, aligning with the previous resistance level and the upper Bollinger Band. This strategy combines the oversold RSI with the potential for a bounce off the lower Bollinger Band, aiming to capitalize on a short-term reversal. Based on the provided historical and forecast data for optimism, a potential investment strategy emerges. The price has shown an upward trend in the past 2 weeks, with support around $1.01 and resistance at $1.69. The forecast suggests a slight dip in the coming week, but the overall trend remains positive. Given this, a long position could be considered. A suitable entry point would be around $1.06, near the predicted low for the week. A stop-loss order should be placed at $1.01, protecting against a significant price drop. The target price could be set at $1.20, aiming for a 13% gain based on the recent price action and the upward trend. This strategy utilizes the support level as a safety net and the projected price movement as a guide. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend favors a downside move. Therefore, a short position strategy is recommended. A suitable entry point would be around $0.225, the current support level. A stop-loss order should be placed at 23 cents, slightly above the entry price, to limit potential losses. The initial target price could be set at 21 cents, aligning with the forecast data. If the price breaks below 21 cents, the stop-loss can be moved to 21 cents to protect profits. This strategy leverages the downtrend and the potential for a breakout below the support level. It utilizes technical indicators to identify entry and exit points, while risk management measures are in place to mitigate potential losses. Based on the provided historical and forecast data, Solana appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The RSI indicator is also in oversold territory, suggesting that the price may be due for a bounce. However, the price is approaching the support level of $157, which may provide a temporary floor. Therefore, a potential strategy could involve entering a long position at the support level of $157 with a stop-loss order placed below the recent low of $165. The target price could be set at the resistance level of $168, which represents a potential upside of 6.4%. This strategy combines the potential for a bounce from oversold conditions with the support level acting as a risk management tool. Based on the provided data, Jupiter appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement. The RSI indicator also supports this view, hovering below $50 and showing no signs of a bullish reversal. Therefore, a bearish strategy is recommended. A suitable entry point would be around $0.793, the lowest predicted price for the coming week. The stop loss should be set at $0.819, slightly above the entry price, to limit potential losses. The target price could be $0.725, the lowest recorded price in the historical data. This strategy combines the downtrend analysis, RSI oversold levels, and support price levels for a potentially profitable short position. Based on the provided data, Render appears to be in a downtrend. The historical price data shows a general downward movement, with the forecast data predicting further decline. The RSI indicator also supports this bearish outlook, as it has been hovering below $50 for the majority of the period. Therefore, a short position strategy is recommended. A potential entry point would be around $4.18, the closing price on February 21st. A stop-loss order should be placed at $4.38, slightly above the recent high, to limit potential losses. The target price could be set at $3.82, the forecast price for February 28th. This strategy leverages the downtrend and the oversold RSI conditions to potentially generate profits. Based on the provided historical and forecast data, Solana name service appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement. Therefore, a bearish strategy is recommended. A good entry point would be around $0.139, close to the predicted low for the coming week. A stop-loss order should be placed at $0.146 to limit potential losses. The target price could be set at $0.115, aligning with the projected price decline. This strategy utilizes the downtrend and the forecast to identify a potential entry point and set profit targets and risk management parameters. Based on the provided data, Doge-Coin appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support and resistance levels, while the forecast data suggests a potential continuation of this downward trend. The RSI indicates that the asset is not currently oversold or overbought, suggesting a neutral sentiment. However, the Bollinger Bands show that the price is approaching the lower band, which could signal an imminent price bounce. Therefore, a potential strategy could involve a long position with an entry price around $0.238, the projected low point for the week. The stop-loss price should be set at $0.226, the recent low point of the Bollinger Bands. The target price could be set at $0.272, the recent high point of the historical price data. This strategy aims to capitalize on a potential rebound from the lower Bollinger Band while mitigating risk with a tight stop-loss order. Based on the provided data, PEPE appears to be in a sideways trend with a slight bearish bias. The historical price data shows consolidation around the support level of $0.000000870, while the forecast data suggests a potential decline towards $0.000000850. Considering these factors, a short position could be initiated at the entry price of $0.000000910. With a stop-loss order placed at $0.000000930 to limit potential losses. The target price for this trade is set at $0.000000850, aiming for a profit of approximately 6%. This strategy leverages the potential for a continuation of the bearish trend, supported by the RSI indicator, which is currently in a neutral zone but trending lower, and the Bollinger Bands, which show price action approaching the lower band. Based on the provided data, SHIB appears to be in a downtrend with a potential for further decline in the coming week. The historical price data shows a consistent downward movement, and the forecast prices also indicate a bearish outlook. The RSI, hovering around $40, suggests that the asset is neither overbought nor oversold, indicating a potential for further movement in either direction. However, the Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction. A cautious strategy would be to enter a short position at the current market price of $0.0000155, with a stop-loss order placed at $0.0000158 to limit potential losses. The target price could be set at $0.0000145, which aligns with the forecast price for the week and a support level. This strategy capitalizes on the potential downtrend while managing risk through a tight stop-loss. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI, while showing some fluctuations, remains below $30, indicating oversold conditions. The Bollinger Bands also suggest a downtrend, with the price consistently trading below the middle band and approaching the lower band. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $0.647. Set a stop-loss order at 68 cents and a target price at 52 cents. This strategy leverages the downtrend identified by the price action, RSI, and Bollinger Bands. The stop-loss protects against potential upward reversals, while the target price aims to capture a significant portion of the anticipated downward movement. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue. The support price at $0.00255 acts as a potential floor, while the resistance price at $0.00615 presents a significant hurdle. Given this, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.00271, the first forecast price, to limit potential losses. The target price for this trade is $0.00255, the support level. The RSI indicator shows the asset is oversold, further supporting the short position. The Bollinger Bands are narrowing, suggesting a potential breakout in either direction. However, the overall downtrend and the price action below the middle band indicate a higher probability of a downward move. This strategy combines the trend analysis, RSI oversold signal, and Bollinger Bands interpretation to maximize potential profits while managing risk. Based on the provided data, Near Protocol appears to be in an overall upward trend. The historical price data shows a consistent rise, with the forecast data indicating further potential for growth. The support price at $3.14 provides a solid foundation, while the resistance price at $4.91 presents a potential ceiling. A long position could be initiated when the price breaks above the resistance level of $4.91. The stop-loss order should be placed below the recent swing low, around $3.14, to limit potential losses. The target price could be set at $4.91, representing the initial resistance level. Additionally, the RSI indicator suggests that the asset is not currently overbought, with values remaining below $80. The Bollinger Bands show a narrowing pattern, indicating a potential breakout in either direction. If the price breaks above the upper Bollinger Band, it could signal a further upward surge. Based on the provided data, Internet Computer appears to be in a slight downtrend. The price has been fluctuating around the support level of $6.76, with a recent dip towards the end of the historical period. The forecast data suggests a continuation of this downtrend, with prices projected to fall further. Therefore, a short position is recommended. The entry price should be around $6.85, with a stop-loss order placed at $6.97, slightly above the recent high, to limit potential losses. The target price could be set at $6.57, based on the forecast data. This strategy leverages the downtrend and the RSI indicator, which suggests that the asset is not overbought. Additionally, the Bollinger Bands show that the price is approaching the lower band, which could signal a further decline. Based on the provided data, Injective appears to be in an upward trend. The historical price data shows a general increase over the 2 weeks, with support holding firmly around $13.90. The forecast data also suggests continued upward momentum. A buy signal can be triggered when the price reaches $14.50, which is a level where the price has previously found support and is now approaching. A stop-loss order should be placed at $13.90 to protect against a potential reversal. The target price for this trade is $15.60, which is the recent resistance level. This strategy utilizes the support and resistance levels as well as the upward trend to identify a potential entry point and profit target. Based on the provided data, BTC appears to be in an overall uptrend. Historical prices show a consistent upward movement, supported by the forecast data, which predicts continued growth. The support price of $375 acts as a strong floor, while the resistance price of $468 presents a potential ceiling. Considering these factors, a long position could be initiated. A suitable entry price would be around $410, near the current market price and below the recent resistance level. A stop-loss order should be placed at $375, protecting against a significant price drop. The target price could be set at $475, aiming for a $15% profit based on the predicted upward trend and historical price action. This strategy leverages the positive momentum and potential for further growth in BTC while managing risk through a well-defined stop-loss. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a general decline over the 2 weeks, with the price hovering around the support level of $1.26. The forecast data suggests this downtrend might continue in the coming week, with prices potentially dropping below the current support level. Considering this, a short position could be taken on THETA network. The entry price should be around $1.28, which is slightly above the recent lows and the predicted price for February 22. The stop-loss should be placed at $1.31, offering a buffer against potential price reversals. The target price could be set at $1.20, based on the forecast data and the anticipated continuation of the downtrend. This strategy leverages the potential for further price decline while managing risk through a defined stop-loss order. Based on the provided data, WorldCoin shows a potential downtrend. The price has been consistently declining over the past 2 weeks, with the forecast predicting further drops in the coming week. The support price at $1.13 might offer a temporary floor, but the overall bearish sentiment suggests a continuation of the downward movement. Therefore, a short position strategy is recommended. Enter a short position at $1.18, with a stop-loss order placed at $1.22 to limit potential losses. The target price could be set at $1.05, aiming to capitalize on the predicted decline. Additionally, consider using the RSI indicator. If the RSI falls below $20, indicating extreme oversold conditions, it could signal a potential buying opportunity for a short squeeze, allowing you to exit your short position with profits. However, remain cautious as the Bollinger Bands suggest a high volatility, which could lead to unexpected price swings. Analyzing the provided data, Hooked Protocol appears to be in a sideways trend with a slight upward bias. The historical price action shows fluctuations within a defined range, with support around $0.198 and resistance at $0.353. The forecast data suggests continued consolidation within this range. Based on this analysis, a potential long position could be initiated around $0.198 support level, with a stop-loss placed at $0.195, slightly below the support level. The initial target price could be set at $0.245, previous resistance level. This strategy leverages the potential for a breakout above the current range, while limiting potential downside risk. Monitoring the RSI and Bollinger Bands can help confirm the strength of the trend and potential for price movement. Based on the provided data, Artificial Superintelligence Alliance appears to be in a sideways trend with a slight downward bias. The historical price action shows consolidation between the support level of $0.721 and the resistance level of $1.25. The forecast data suggests a potential further decline in the coming week. Therefore, a bearish strategy is recommended. Enter a short position at the market price around 77 cents dollars. Set a stop-loss order at 79 cents dollars to limit potential losses. Target a profit at 68 cents dollars, which aligns with the forecast low and the lower Bollinger Band. This strategy combines the bearish outlook from the price action and forecast with the potential for a price break below the support level. Based on the provided historical and forecast data, Polkadot appears to be in a slight upward trend. The support price of $4.77 has consistently held, indicating strong buying interest. The forecast prices suggest a continuation of this upward trend in the coming week. Therefore, a long position could be initiated with an entry price around $4.85. A stop-loss order should be placed at $4.77 to limit potential losses. The target price could be set at $5.10, aiming for a potential profit of 5%. This strategy incorporates the upward trend and support level, aiming to capitalize on the potential price increase. Based on the provided data, Filecoin appears to be in a sideways trend with a slight downward bias. The historical price data shows a range between $3.13 and $3.49, with recent prices hovering closer to the lower end of this range. The forecast data suggests this downward trend may continue, with prices predicted to fall below $3.20. Given these factors, a short position strategy might be considered. A potential entry point could be around $3.24, the first forecast price below the recent range. The stop-loss order should be placed at $3.31, slightly above the recent high and the 20-day moving average. The target price could be set at $3.11, the lowest predicted price in the forecast period. This strategy utilizes the downward trend and the RSI indicator, which is currently below $40, suggesting potential oversold conditions. While Bollinger Bands show a narrowing range, indicating potential volatility, the overall trend suggests a move towards the lower band. Based on the provided historical and forecast data, Conflux appears to be in a sideways trend with a slight upward bias. The support price at $0.113 acts as a strong floor, while the resistance at 12 cents caps potential upside. The RSI oscillates between $33 and $44, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands, while wide, also indicate a sideways trend with prices fluctuating within the bands. Therefore, a conservative buy strategy could be implemented. Enter a long position at $0.113, the support level, with a stop-loss order placed at $0.111 to limit potential losses. A target price of 12 cents, the resistance level, can be set for initial profit taking. This strategy leverages the support level and the potential for a breakout above the resistance. Remember, this is just one possible strategy based on the provided data, and market conditions can change rapidly. Always conduct thorough research and risk management before making any investment decisions. Based on the provided historical and forecast data, Ethereum name service appears to be in a sideways trend with a slight upward bias. The support price of $25.20 has held strong, while the resistance price of $27.20 has capped upward momentum. The RSI oscillates around the neutral level, indicating neither strong bullish nor bearish sentiment. The Bollinger Bands are relatively tight, suggesting low volatility. Considering these factors, a potential long position could be initiated around $25.80, the recent high point, with a stop-loss order placed at $25.20, the support level. The target price could be set at $27.20, the resistance level. This strategy utilizes the recent price action and key support and resistance levels to identify a potential entry point with defined risk and reward parameters. The stop-loss order limits potential losses, while the target price aims to capture a reasonable profit if the price breaks through resistance. Based on the historical and forecast data, Avalanche appears to be in a short-term downtrend. The price has been declining over the past 2 weeks, and the forecast suggests further decline in the coming week. The support level of $24.40 is crucial to watch, as a break below this level could signal further downward movement. Therefore, a bearish strategy is recommended. A good entry point for a short position would be around $24.90, with a stop-loss order placed at $25.40 to limit potential losses. The target price could be set at $22.90, which aligns with the forecast price and represents a potential profit of 8%. This strategy utilizes both the current trend and the price forecast to maximize potential returns while managing risk. The RSI and Bollinger Bands can be used to confirm the trade setup and manage the position. Based on the provided data, Bitcoin appears to be in a short-term downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI indicates the market is not oversold, but it's also not in overbought territory. The Bollinger Bands show price action contracting, suggesting a potential breakout in either direction. Considering these factors, a cautious short position could be considered. A potential entry price would be around $0.0318, with a stop-loss order placed above the recent high at $0.0328. The target price would be set at $0.0296, the first significant support level in the forecast data. This strategy aims to capitalize on the potential continuation of the downtrend while managing risk with a tight stop-loss. Based on the provided data, PENDLE appears to be in a sideways trend with a slight upward bias. The historical data shows price fluctuations within a defined range, with support around $3.39 and resistance around $3.69. The RSI oscillates within a neutral range, suggesting a lack of strong momentum in either direction. However, the forecast data indicates a potential for upward movement, with prices projected to rise slightly over the next week. Considering these factors, a potential strategy would be to enter a long position around the support level of $3.39. A stop-loss order could be placed at $3.35 to limit potential losses. The target price could be set at $3.55, aiming to capture a potential upside move based on the forecast data. This strategy combines the support level with the forecast data, aiming to capitalize on a potential upward trend while managing risk. Based on the provided historical and forecast data, the sandbox appears to be in a downtrend. The price has been consistently declining over the past 2 weeks and is projected to continue falling in the coming week. The support price of $0.306 is acting as a temporary floor, but the downward pressure is significant. Considering these factors, a short position is recommended. A suitable entry price would be around 36 cents, near the resistance level. The stop-loss order should be placed at 37 cents to limit potential losses. The target price could be set at 33 cents, aligning with the projected forecast and the support level. This strategy utilizes the downtrend and resistance level to enter the trade, with a stop-loss to manage risk and a target price based on the forecast and support. Decentraland shows a downtrend based on the historical and forecast data, with prices consistently declining over the past 2 weeks and expected to continue falling in the coming week. The RSI indicator suggests that the market is oversold, with values consistently below $30. This indicates a potential for a short-term rebound. However, the Bollinger Bands show that Decentraland is trading near the lower band, suggesting a continuation of the downtrend. Based on this analysis, a short position is recommended. Enter a short position at the market price when the price breaks below the support level of $0.288. Set a stop-loss order at $0.298 to limit potential losses. The target price for this trade is 27 cents dollars, based on the projected downward trend. Based on the provided data, ENG coin appears to be in a consolidation phase. The price has been fluctuating within a range, with support around $0.116 and resistance at $0.248. The RSI oscillates between $32 and $42, indicating neither overbought nor oversold conditions. The Bollinger Bands are relatively tight, suggesting low volatility. Considering these factors, a neutral position with a long bias is suggested. Enter a long position at $0.118 with a stop-loss at $0.116. The target price is set at $0.135, aiming for a potential upside of 14%. This strategy leverages the potential for a breakout above the recent consolidation range, while mitigating risk with a tight stop-loss. Based on the provided historical and forecast data, Uniswap appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level of $8.21 provides a potential floor for the price, while the resistance level of $8.99 acts as a ceiling. Considering these factors, a short position could be initiated with an entry price at $9.30, slightly above the recent low. A stop-loss order should be placed at $9.50 to limit potential losses. The target price for this trade could be set at $7.76, aligning with the forecast low for the week. This strategy leverages the downtrend and aims to profit from the expected price decline. Based on the provided data, Chainlink appears to be in a short-term downtrend. The price has been declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI is currently hovering around $37, suggesting the asset is not oversold. However, the Bollinger Bands show the price is moving closer to the lower band, indicating a potential for further price decline. Therefore, a bearish strategy is recommended. Enter a short position at the market price around $18. Set a stop-loss order at $18.50 to limit potential losses if the price unexpectedly moves upwards. The target price for this trade is $16.70, which aligns with the predicted lows in the forecast data. This strategy leverages the perceived downtrend and the proximity to the lower Bollinger Band. Based on the provided historical and forecast data, Aave appears to be in an overall upward trend. The price consistently fluctuates within a defined range, with support at $174 and resistance at $264. The RSI indicator suggests the asset is not currently overbought or oversold, hovering around the neutral level. The Bollinger Bands indicate a narrowing price range, potentially signaling a breakout in either direction. A buy position could be initiated if the price breaks above the resistance level of $264 with strong volume confirmation. A stop-loss order should be placed below the recent support level of $253 to limit potential losses. The initial target price could be set at $280, representing a 6% gain from the entry point. This strategy combines the trend analysis, support/resistance levels, and potential breakout scenario. Based on the provided historical and forecast data, EOS appears to be in a sideways trend with a slight upward bias. The support and resistance levels indicate a potential range-bound movement. The RSI suggests that the asset is currently in a neutral zone, neither overbought nor oversold. Considering these factors, a long position could be initiated if the price breaks above the resistance level of $0.721. The entry price would be $0.725, with a stop-loss order placed at $0.614, the support level. The initial target price would be set at $0.772, representing the upper Bollinger Band. This strategy combines the breakout above resistance with the potential for upward momentum indicated by the Bollinger Bands. Based on the provided data, Tron appears to be in a sideways trend with a slight upward bias. The price action has been oscillating between the support level of $0.222 and the resistance level of $0.246. The RSI indicator is currently hovering around $45, indicating that the asset is not overbought or oversold. The Bollinger Bands are relatively tight, suggesting low volatility. Therefore, a potential strategy would be to enter a long position when the price breaks above the resistance level of $0.246 with a stop-loss order placed at $0.222. The target price could be set at $0.263, which is the upper Bollinger Band. This strategy aims to capitalize on a potential upward breakout while managing risk by setting a tight stop-loss. Based on the provided historical and forecast data for Suncoin, a potential investment strategy emerges. The price has been fluctuating around the support level of $0.0185, suggesting a potential bullish trend. The forecast predicts a slight dip in price during the next week. Therefore, a buy position could be initiated at the support level of $0.0185 with a stop-loss order placed at $0.0183 to minimize potential losses. The target price could be set at $0.0192, which represents a potential upside of approximately 4.3%. Furthermore, the RSI indicator shows that the asset is currently in a neutral zone, avoiding both overbought and oversold conditions. The Bollinger Bands suggest a potential narrowing of the price range in the coming days, which could lead to a breakout in either direction. However, the recent price action and forecast data indicate a higher probability of an upward movement. Therefore, the buy position strategy based on the support level and the bullish trend outweighs the other strategies.